Welcome to your daily Solo 401k webinar, a Q&A session with my Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, top 5 reasons to set up your Solo 401k before year end, not after. This is your chance to get answers, so please use the chat now to ask questions on today's topic or anything else. Again, please chat them over now so that we can be sure to get to them all. Let's get started. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So here's an overview of what we want to go through on today's webinar. What you'll learn today, why setting up a solo 401k now matters, what you lose if you wait until 2026 to set up a solo 401k, key benefits you lock in by setting up the plan by December 31st of 2025, and then of course how to get started today, quick and easy. So the reason number one to open up a plan here in 2025 would be to lock in the ability to make all types of contributions, whether employee, employer, and or voluntary after tax, by your business tax return deadline, including extension next year in 2026. Please note that you can also then take your time to open up accounts for the solo 401k. So all you need to do is sign up by the end of the year, and that'll give you the options, the most options to make all the different types of contributions, whether employee, employer, or voluntary after tax, which is how you make mega backdoor Roth contributions within the most amount of time. So you can make all the contributions and have the most amount of time. Because if you sign up by December 31st, 2025, you'll preserve the ability to make all types of contributions by your self-employed business tax return deadline, including extension in 2026. So not only that, it's also noteworthy that a solo 401k has the highest contribution limits for any defined contribution plan. So whether your goal is to reduce your taxable income by making pre-tax employee plus pre-tax employer, and or whether you're looking to maximize the funds that end up in a Roth account, such as a mega backdoor Roth. So all the options will be on the table. So reason number two to set up your solo 401k plan now before year end and not after is that you'll be able to start claiming the tax credits when you file your 2025 tax return. So setting up a solo 401k through my solo 401k Financial will automatically make the self-employed individual or business eligible to claim $1,500 in solo 401k tax credits. That's $500 per year for 3 consecutive years. So if the plan is established here in 2025, the individual would be able to start claiming those $500 per year credits when they file their 2025 tax return. So in order to be eligible for the credit, you need to have a plan like the one offered by my solo 401k Financial that includes the auto enrollment feature. So the basic plans, for example, that are offered by discount brokerages like say Fidelity and Schwab, they do not support, they do not allow you to be able to claim these credits. But our plan does, but at the same time, you can still have your accounts at the bank or brokerage of choice, with Fidelity and Schwab being the top options. Now, it's also noteworthy that in order to be eligible to claim the credits, the plan needs to have the auto enrollment feature. Now, part of that feature will establish a default 3% contribution percentage, but the solo 401k owner, as the participant, has the right to opt out of that default 3% contribution percentage. And the fact that they've exercised their right to opt out of the default doesn't mean that the plan doesn't include the auto enrollment feature. It still does. So, notwithstanding the fact that they exercised their right to opt out of the default contribution percentage, they can still claim the credits. So, opting out of the default simply means that the individual is going to be able to make contributions in whichever percentage or amount or schedule that they prefer, of course, subject to the limits and the deadlines. So this is a great way to cover the costs to set up and maintain our solo 401k plan, because our plan fees are $650, which includes the $525 establishment fee plus the first $125 annual fee. Then starting 12 months later, we charge our $125 annual fee that covers the second year. So these $1,500 in tax credits will more than cover our fees for the first 7 years. Reason number three to set up your solo 401k plan now before year end and not after is that you could immediately then start to roll over funds and invest in alternative investments. So one of the top reasons that customers set up accounts with us is that our plan, of course, not only allows for typical brokerage type investments like stocks, bonds, mutual funds, but also true alternative investments like real estate, crypto, private placement, notes, and more. And as part of the onboarding process, we help our customers open up accounts at the bank or brokerage of choice, including accounts where they, as the solo 401k trustee, right, the self-employed individual serves as the trustee of the plan. They have direct checkbook control, so they can act quickly to take advantage of investment opportunities. So if someone wants to be able to start investing as soon as possible, that would be another reason not to wait and to set up a solo 401k plan now. Reason number four, gain access to a solo 401k loan. So our plan would allow the solo 401k owner to borrow up to 50% of the balance, not to exceed $50,000, where those funds could be used for any purpose, including the personal purpose. Could be paying off debt, investments, et cetera, et cetera. And the withdrawal will not be subject to taxes or penalties as long as it's properly documented as a loan, which we do handle the loan documentation requirements as part of our service for no additional charge, and paid back according to the loan terms. So those loan terms are going to require that the loan is paid back in either monthly or quarterly payments, equal payments of principal and interest. The interest is prime plus 1%, or it could be a CD rate plus 2%, with those payments spread over a 5-year term. Reason number five is the expert compliance support. So, for example, one of the top use cases is individuals will have a basic plan somewhere else. It could be a basic solo 401k plan that they set up at a discount brokerage like Fidelity or Schwab, and now they upgrade the plan to take advantage of not only the service and features, but also the compliance support. So once the value of that plan exceeds $250,000, there is an informational tax filing requirement that applies. The name of that tax filing requirement is Form 5500EZ. So those discount brokerages, they're not going to handle the 5500EZ for you. Whereas as an optional free service for our customers, we will prepare that 5500EZ so it can be filed under the electronic filing system. And again, that's an optional free service for so no additional charge. Whereas someone who has, say, the basic plan at a Fidelity or Schwab, their CPA may do it, but of course they're going to charge a fee. So that would be another reason is to get that expert compliance support. If the value is already over $250,000, if you restate your plan here now in 2025, then we would handle that 2025 5500 EZ that's due next year, as long as the client requests it as part of the onboarding process and lets us know that the value exceeds $250,000, because we, of course, don't have access to the account, so we wouldn't know otherwise. So what happens if you wait? Well, you'll lose the ability to make all types of contributions by the business tax return deadline, including any timely filed extension next year. So it's still possible to set up a plan after the end of 2025 and still make 2025 contributions, but you'll start to lose the ability to make all types of contributions and the time in which you've got to make those contributions can also be impacted as well. So to preserve the ability to make the most types of contributions and have the most time, the key is to establish the plan on or before December 31st of 2025. Delay the first year of the tax credit. That's another consequence of waiting. So if you waited to set up the plan or upgraded your existing plan until next year, you would still be eligible for the tax credits, but because the plan was not established or upgraded until 2026, the individual wouldn't be able to start claiming those credits until they file their 2026 tax return. If you wait, then you're not going to be able to roll over money or take a loan or other Roth strategies. So that would also be delayed. You would also delay any tax deferred or tax free growth that you might accrue by investing in, say, alternatives, right? Because your funds would still be in the accounts that they're currently in. Risk non-compliance, right? If you're restating an existing plan and fail to file the 5500EZ. So if you have that basic plan at, say, Schwab or Fidelity, and the value's in excess of $250,000, if you keep it at Fidelity and Schwab, they're not going to handle the 5500EZ for you. But if you upgrade the plan here in 2025 and then let us know as part of that onboarding process that the value exceeds $250,000, then we'll add your plan to the queue and follow up with you in the first part of next year to capture the information needed so we can prepare the 5500EZ so that it can be filed under the electronic filing system. So the key steps would be to just complete our short 1-minute online application and make payment. You'll then receive the plan documents within the same business day. That'll meet the December 31st deadline. You can then take your time to open accounts and fund the accounts when ready, even in 2026. All right, that takes us to the end of the slides that we wanted to share. Thank you so much for your participation. Let's turn to the questions that are being chatted up. Thank you so much. Here are my questions. I'd like to open the account in Schwab and execute the mega backdoor Roth. Do you open 2 accounts in Charles Schwab, which includes 1 sub account? And will you complete the master account application for me, or I need to do that on my own? Do you file the 1099-R, or do I file it? If you file it, how long does that take, and what confirmation do I receive indicating that it has been filed? Those are some great questions. So assuming that the individual is eligible to establish the plan because they're self-employed with no employees working for any business owned by that person or a spouse, if any, they would be eligible to set up a solo 401k. And our plan certainly allows for the mega backdoor Roth contributions. Now we're neutral as far as where the accounts are at. So one of the top options is Schwab. So as part of the onboarding process, we ask the client, where do they want to open up the accounts at? So if they let us know that they want to go with Schwab, we would prepare the paperwork. So that answers one question. We prepare the paperwork. And we would prepare the paperwork to open up multiple accounts. So for example, if they're looking to make a mega backdoor Roth solo 401k contribution, that's a 2-step process where the funds are first deposited into an after-tax account before they're moved to a Roth account. So we would prepare the paperwork to open up 2 accounts. The individual, because we don't have access to the accounts, would make the contribution first to the after-tax account. Then they would move the money to the Roth account, and we have guides, and we would, guide them through that process to do that. Now, when you make that first step, when you make that first contribution, the contribution itself doesn't need to be reported. It doesn't need to be reported on the personal tax return or the business tax return. Doesn't need to be reported on the W-2 if they're self-employed business, for example, is taxed as an S corp and they receive a W-2. But the second step, when you move the money from the after tax to the Roth, that does need to be reported on the Form 1099-R. And we handle that as an optional free service for our customers. Customers just have to let us know by completing an online form to give us the information we need to prepare the 1099-R. And then we would provide that by February of the following year. So if the after-tax contribution and then transfer to the Roth occurs in 2025, and they submit the online form here in 2025, then we would provide it by February 2026. And we filed under the electronic filing system. Then we provide a copy to the client. They can share it with their tax advisor. Hopefully that helps. Looks like the next person had to step away. Thank you for bringing the questions, though. We'll follow up with you after the webinar. I just applied for a solo 401k. Thank you. Thank you. Will I be able to have an online account on your website, or is everything dealt with by emails? So we do not provide accounts. We don't have access to our customers' accounts. So when someone signs up and makes payment, we prepare the documents to establish the plan within the same business day. We send an email to the email address that was used on the application. And that email is going to give them access to our secure document portal where they can access the documents needed to establish the plan. So they download those pre-filled documents. They sign. The email specifies where to sign. They then upload the completed and signed pages. So in that initial email, there will be a second link where they can upload the completed and signed pages back to the portal. Then there'll be a third link in that same initial email where they can submit the next steps questionnaire to tell us where they want to open up the accounts. Let's say they go with Schwab. Then we will then obtain an EIN number for the solo 401k and prepare the paperwork that Schwab requires to open up the requisite number of accounts. Hopefully that makes sense. Thank you so much for the great questions. So we can attempt to rush it, yes, but it's due by February. It's technically due by March, but we get it out by February because we do it in the electronic filing system. If this information is helping you feel more confident about your future, please take 1 second to like and subscribe. Liking tells the platform that this content is valuable, which helps other solopreneurs like you find it. Subscribing guarantees that you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. We also want to invite you to our community. We have the largest community of solopreneurs and self-directed investors, solo 401k owners. We've got over 30,000 members, which means we've got vibrant forums. We have a library of videos and webinars. It's totally free to join. All are welcome. You can join quickly and easily at mysolo401k.net/my community. So please don't hesitate to join. So it's definitely possible to trade currency with our solo 401k plan. The individual would need to have an account opened up under the name and EIN number of the plan. And if they've got different types of funds that they're trading, like say pre-tax versus Roth, they would need separate sub-accounts. So the key is having that account opened up under the name and EIN number of the plan, and then funding it either with contributions subject to the contribution limits, or they could transfer money from a pre-existing retirement account to fund it, etc. No, these are published on YouTube. So they're also available on our YouTube channel, to be clear. We're live on YouTube right now, as well as other social channels. Yes, as long as it's yeah, as part of the onboarding process, we ask you if you want to do a rollover now or if you want to do it later, that's fine too. We'll still help, of course. So we would then, our transfer team would reach out to you to have you upload a recent account statement so we can prepare the transfer paperwork. Of course, you can roll over money from a pre-tax IRA, but you can't roll over Roth IRA money to any type of 401k, including a solo 401k. It's available for new customers, existing customers, just interested parties. All are welcome. So as far as the deadline, Self-employed individuals have more time to make contributions. So if you have a 401k, for example, at a corporate job, the employees have to make the contributions by the end of the year. But under the rules, self-employed individuals have more time. And that's clear based on IRS publication 560, which is the landmark guidance for self-employed retirement plans like solo 401ks. And it makes sense from a policy perspective because your ability to make contributions is based off of your self-employment income. So a lot of self-employed individuals may not know exactly what their income is until after the end of the year. So under the rules, as long as the plan is established, and remember, a solo 401k plan is a legal entity, it's a trust. So like any legal entity, it's the documents that create it. So all that's needed is to establish the plan, meaning the documents by the end of the year, and then that preserves the right to make all types of contributions, including opening up the accounts next year by the business tax return deadline, including any timely filed extension. So that these recordings are available on YouTube. So if you subscribe to our YouTube channel, you get notifications, you can find them there. So if the business is taxed as an S corp, the and the plan is established by December 31st, 2025, then the individual will have until March 15th or September 15th if they file a timely extension to open accounts and make contributions for 2025. All right, we'll give it a moment to see if there's any more questions. Okay, go ahead. And again, if you could please like the video, that helps us to get the word out from other solopreneurs just like you. All right. So if daytime job contribute 23,500, so you max out the employee contribution, and then you don't make any other contributions to the solo 401k, you want to do the full $70,000 voluntary after-tax contribution. That is fine as long as the daytime job is a 401k plan, not a 403b, number one. Number two, as long as you don't make any other contributions to the solo 401k other than this after-tax contribution. And then number three, as long as you have at least $70,000 of self-employment compensation. So in the case of an S corp, as long as you have at least $70,000 of W-2 wages from the S corp, then what you describe is totally acceptable from a solo 401k perspective. Now, if you decide to do a mixture of employer and after-tax contributions, then it would be limited to 20, the employer contribution would be limited to 25% of the W-2 wages from the business taxes and S corp. And then you could do the difference up to 70,000, assuming you have at least $70,000 W-2 wages as an after-tax contribution. Yes, so the employer contribution limit and the voluntary after-tax contribution limit applies at the plan level, whereas the employee contribution limit applies at the employee level. So if somebody makes a $23,500 employee contribution to their day job 401k, and they've got another $70,000 of self-employment income, like $70,000 of W-2 wages from their business taxes and S corp, they can make another $70,000 voluntary after-tax contribution to the solo 401k. The only exception, the only exception to that rule is the 403b exception. So if the contributions to the day job plan were going to a 403b, then you would have to aggregate. Hopefully that makes sense. All right, well, that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here with more crucial content to help you secure your retirement. Thank you so much.